thinking about tax strategies, kind of being proactive versus reactive, we see that people here, they know that they need to be leveraging tax strategies throughout the year, but what does that actually look like?
Yeah. So obviously, the more often you're thinking about your taxes, the more often you're going to have an opportunity to take advantage of benefits. In general, when we're trying to optimize your taxes, there are two different routes that we can go. We can reduce your tax liability and we can defer paying taxes. That would be you're going to pay tax at the same rate, but instead of paying tax this year, you're going to pay tax next year. So you're saving the time value of money. And the other way to save is to reduce your tax liability in general, which is instead of paying tax at 32%, you're going to pay tax on this income at 24%. And that's getting a true benefit. So we really want to try to find strategies that are going to help you obviously pay tax, later and get that time value of money, but also optimize getting you in that right tax bracket and getting you to pay income tax at the lowest rate possible. And being able to do that means constantly having your finger on the pulse of where do you think you're going to be this year. So if you think that if you're on the cusp of an income tax bracket, then it's really valuable and perhaps more important to leverage tax strategies and reduce your taxable income to a certain number in order to pay tax at a lower rate this year. Or in the case of some customers where maybe you've sold your business or you're in a particularly low income tax year, if you're again doing that proactive planning, you can take advantage of that in a reverse way. So for example, we had a client that they had sold their business and they decided to take a year-long sabbatical. So they were in a unique situation where they had a really low income year. What we did is we decided to convert their retirement savings to a Roth. So we actually increased what they were going to pay in taxes for the year that we did this. But we put all of their retirement savings into a Roth, so it's going to grow tax-free. So they're going to have a lot of future tax-free income. And also the tax rate that they paid on that Roth conversion was much lower than what they would have paid if they had done that in any other year. So really taking advantage of those pockets of time where things are going to be more or less valuable to you and taking advantage of the timing.
Yeah. And I think you hit on all the great points, Rachel. I think the only other thing that I would kind of emphasize is, some of these creative tax strategies that we're going to talk about on this call, or maybe you've heard of before. Some of them we can go back and kind of retroactively make sure that you're taking advantage of them. But we want to make sure that your documentation is done properly because, knock on wood, you don't or ever get audited. But if you were to be audited and you're pursuing some of these strategies, we want to make sure that we're doing it properly and that the documentation is there. And it's just not always a lot of fun to have to kind of scramble at year end or even after year end in tax season to get the documentation done properly. So that's one side of the coin. But the other side of the coin is there are going to be some strategies that if you're not thinking about this continuously through the year, you're just out of luck. You can't go back retroactively and apply the strategy. One of those that we're going to talk about later on in this call is PTET, pass-through entity tax credits. I saw that some of the attendees on the webinar today are from more high tax states like New York. And in New York, if you're going to pursue PTE for your S Corp, you would have had to have made that election by March 15th. So if you haven't done that already, we just can't go back and do it for 2024. So definitely best case scenario is just to be working with your CPA all throughout the year so that you're on top of these things.
Awesome. Yeah. So interesting. So timing makes such a big difference. And then in particular, trying to be mindful of where you're most likely to land at kind of in the income bracket, right? Or in these different tax brackets and being aware, especially if you find yourself kind of near one of those thresholds it's important to be thinking about what those different strategies could be. This is great.